Hello and welcome into the KE Report. Chad and Corey here, getting an update from Dana Samuelson. He is the founder and president of the American Gold Exchange, and we like having Dana on the show to give us an update on what he is seeing in the trends in the physical markets on the investment side. And Dana, we had you back on the show in February, so it's been a little while since we've talked, but boy, gold and silver have sure reacted since then, especially gold. As we close up today on September the 30th, it's the end of the month, end of the quarter, highest quarterly and highest monthly close in gold ever. We've had a string of record highs where gold even breached 2,700. It's pulled back some as we start this week, and it pulled back a little the end of last week, but still a banner year for the yellow metal. And then silver putting in the highest quarterly and monthly close that it has in a decade. So all in all, pretty good strength in the precious metal sector. What trends are you seeing when you talk to investors investing in the coins and the bars and the physical side of things, Dana?
Well, it's been a very interesting market, and thanks for having me on, guys. I really appreciate it. Since gold went over 2,350, 2,400 earlier this year, we have seen a wave of selling by physical owners here in the U.S., and it's mostly long-term holders of gold, or not so much silver, but mostly gold, that have had it since the 80s or early 90s, not so much since the 21st century, a little bit. But I attribute that to inflation's bite, hitting people in their pocketbooks, people needing some cash to supplement what inflation has robbed from their purchasing power. And I think some people are also maybe aging out a little bit. They've had it for a long time, and it's like, oh, it's a good time to sell. But what normally would drive the American public to buy gold when gold's running like this would be fear in the markets, like we had during the great financial crisis or during the COVID economic closures. And we're not seeing that today. We are seeing fear in the global situation regarding, we've got two wars, and especially what's been happening with Israel and Iran. I do think that is helping to fuel gold's rise, in addition to record central bank buying and now the Fed going into their easing cycle.
Dan, I find this so interesting that we're not seeing increased demand out of the Western investor, even when we have heard of these stories of Costco selling all kinds of gold and even other companies getting into gold. Is the Western investor just different, where they might prefer to buy on an ETF because they're more of a trader rather than a long-term holder? Or is this a true change in the market that Western investors, I guess, are just distracted by different markets?
Well, you've got to remember, the stock market's been doing well. It's been setting record highs. And that's where most traditional Western investments are placed, in the traditional paper markets. We've got physical buying in Asia and in Europe that's strong, but we don't have a gold culture in this country like other countries do, where they've either had a war on their shores or their currency fail. And we've had neither of those happen in the U.S. So the U.S. investor is pretty complacent right now, despite what's been happening internationally with regard to physical precious metals. Let's put it that way.
Well, Dana, when you think about it, there's a lot of people living in countries where they're unsure how to hedge their fiat currency risk. Maybe their real estate markets aren't as stable as in North America, definitely not in China right now. But even in Europe and even in South America, we see a lot of not just instability in their markets, but also instability in their governments. So you're seeing that demand from different people in different countries. But when will we start seeing that same kind of demand in the West, where things are maybe a little more stable, but still the need to hedge the fiat currency risk?
Well, I think if the stock market goes into a major correction, that'll cause some funds to come our way. The Fed cutting rates is going to help a bit, because that's going to help to buoy gold and undermine where a lot of the money has gone into money markets. At 5% return, there's been a huge influx of cash in the U.S. into money markets, where people are getting a return for the first time in years above the inflation rate. So we haven't seen a rotation out of stocks or out of money markets yet, but I think the reason those markets could correct lower will be beneficial to gold, which is, the economy is weakening. The Fed has cut rates because they're concerned about the employment market. We've got, fewer new job openings, fewer new hires. Unemployment's still relatively tame at 4.2%, but it's firming up. I think Powell's trying to head off a weakening employment sector, because once that hits a tipping point, it's really hard to reverse a trend. And I think that's we've got a proactive Fed rate cut, but until there's some fear in the U.S. markets, the physical buying of gold will be a bit abated here in the U.S.
So when you mentioned to us off mic that right now you're seeing a very balanced kind of 50-50 balance between sellers and buyers, and the sellers being these long-term holders on the buyer's side, any chance that it's a younger generation that's coming in and starting to show some interest in the metal?
Oh yeah, we got a lot of younger people buying into gold and silver when Bitcoin made its big correction from 65,000 all the way down to about 17.5. That's been undermined a bit by the rebound in Bitcoin in particular, but we're getting younger buyers buying silver in particular. They like silver better. Their money goes farther in ounces, and silver is actually, I think, undervalued compared to gold today. With the gold to silver ratio, the number of ounces it takes to equal 1 ounce of gold in ounces of silver is about 84 to 1, which is high. And that could be, 75 to 1 or 70 to 1, putting silver in the $40 range compared to gold today. So younger buyers, gold's pricing them out a bit, but they're buying silver.
Well, it makes sense that silver's getting a little more popular. As they say, the poor man's gold. It's just easier to digest and easier to start investing for younger investors. But I'm curious, Dana, your thoughts on how the industry has changed over time with the advent of things like ETFs, the GLD and the SLV or the PSLV, things like leveraged funds to gold where they're inverse or they're positively correlated to 2x or 3x. All of the different options that people has maybe watered down the simpler message where you just go to a coin store and buy some gold or buy some silver or go to an online exchange like you have. Do you think that the number of choices, and if you bring in the cryptocurrencies and everything else, has watered down the appeal of getting physical metals, or what trends do you see in that department?
Yeah, I think you've got a real point there that the options are more than they ever have been. When we went into the COVID economic closures and silver got real cheap, dropped to about $12 an ounce, I actually traded a leveraged silver ETF in my IRA account, and I hit a home run with it. So that was good for harnessing the price movement of the metal, especially in a bull market. That's what ETFs are really the best at. Physical gold and silver, they're different. There's friction to the trade in that the buy-sell spreads are not nearly as competitive as they are with mining stocks or with ETFs. And there's certainly no leverage like you can get to a degree with mining stocks and with some ETFs. Physical gold is more of a way to get some of your hard-earned savings out of the depreciating currency and have wealth in a compact, transferable form that has no counterparty risk. And transferable is a big part of, I think, physical gold's allure, is that you can put a lot of value in a very small space and actually hand it to the next person if you want to. 100 ounces of gold is about the size of a paperback novel, weighs about 8 pounds, and it's worth about $250,000 today.
So since, again, a lot of the demand is happening outside of the U.S., and as you said, it's that transferability there where generations can pass it on to next generations. Any up-and-coming countries that we should be aware of outside of, the standard ones that we talk about in Asia that you see as increasing their interest in gold and potentially picking up that next leg higher for the gold price?
Well, we've got record central bank buying around the world due to the de-dollarization movement and the weaponization of the dollar following the Russian invasion of the Ukraine in 2020. Countries that are wary of being sanctioned by the U.S., they can't get out of the dollar as fast as they'd like to because it's entrenched in the world's financial systems. But what they're doing is they're buying gold at record amounts because gold in a vault can't be sanctioned or seized. And that's been a big driver of the gold price. One of the biggest buyers last year was Poland, who sits on the border of Russia, not Russia, but Belarus and the Ukraine. And you'd be surprised. You think, why would Poland be buying a lot of gold? Well, they're kind of in the crosshairs, so to speak. And we're seeing the BRICS nations and the BRICS wannabe nations, the applicant countries, ramping up their gold buying as well. There's talk around the margins that they might come up with some gold partially backed, BRICS currency. I think that's a long shot, but central banks, that are wary of U.S. sanctioning have been buying gold at record amounts. And gold is becoming, by default, the world's reserve currency once again, where it was the world's reserve currency for 2,000 years of man's existence.
Yeah, it is interesting to see that central banks are not really worried about the daily blips. They're buying it as a counterbalance in their reserves to make sure that they have some to counterbalance their fiat exposure. But we're also seeing it, Dana, even in everyday folks. I'm curious to get your take on this because we haven't had a chat with you about the move to start buying gold at Costco and Walmart. I never thought we'd see the day where you could go in and get a pile of groceries and also get a couple gold bars as a convenience item at a store. How do you think that trend has played into at least whetting the appetite for more generalist investors to start holding some of their fiat currency in gold and silver?
Well, to be honest with you, at first I was like, oh no, more competition, that's not good. But the point is, they're really expanding the market. And it's really a beneficial thing because they're allowing more people who might not participate in precious metals ownership to own precious metals. And I know that the people that are selling to Costco that have the Costco account, and they're selling large amounts, they kind of burp it into the Costco system and it gets sold out. And they have to bring another tranche in. But the thing about Costco is they only sell, they don't buy. So I've actually had people come into my place of business or through the mail send me metal that they've bought at Costco just, earlier this year, 10%, 15% lower than it is today, trimming their position a bit. I've got one guy that's using his Costco points to buy groceries for free from Costco because he's bought a lot of gold and gotten a lot of bonus points.
Dana, one other question looking ahead to the U.S. election. What have you noticed in past election cycles as we now are just over a month away from that U.S. election in terms of how gold reacts before and after the election?
Well, we've never had a more set of choices today that are extreme than we've got today with either Donald Trump or Kamala Harris. We know that if Kamala Harris becomes the next president, we'll probably get a pretty big wave of buyers into the physical precious metals, especially gold. The last time Donald Trump was president, by the end of his presidency, the economy was in pretty good shape. We didn't have conflict in the world, and there was not very much demand for gold in 2018 and 2019. So we're, as an industry, I think, facing two distinctly, widely different choices between one of a bump up in business or one perhaps in a reduction of business or a desire for physical precious metals, depending on who wins. And the election is such a toss-up right now. There's no way to call it. And it could be really close when we get to actual election day.
Yeah, Dana, it's going to be kind of turbulent over the next month or so and probably even afterwards. So we'll keep our tabs on how things react and what kind of forecast economists see as a result of the very different policies. I guess just as we wrap up, maybe just spend a quick minute and give listeners a snapshot of what you do over at the American Gold Exchange.
Well, we're a national physical precious metals and vintage U.S. gold and European gold coin dealership. So we deal in the physical precious metals, the most widely traded, competitively priced, easily sellable. That's important for our clients to have liquid gold that they can sell easily. So we deal in U.S. minted gold and silver eagles, Canadian minted gold and silver maple leafs, and Austrian minted gold and silver philharmonics. Those are vanilla, chocolate, and strawberry if they were ice creams, the most popular flavors. We also do a fairly large business of vintage U.S. $10 and $20 gold pieces that were made back in the 30s, 20s, and earlier as currency that still survive today. Some of these are kind of scarce, so when there's a lot of demand, you can harvest a premium that is really quite low now because we've seen a pretty good balance between buying and selling in the U.S. So we've got good supplies and not a lot of demand. So premiums on vintage U.S. gold coins are very low right now. And if you can arbitrage that and buy physical ounces of common bullion when the premiums expand at no additional cost, that's one of the strategies we try to deploy when we can. So we're just humble national physical precious metals mail order company.
All right, Dana, I appreciate you sharing that with our listeners, and I appreciate you sharing your thoughts on what you're seeing as far as the trends from investors, the trends in the physical markets, with central banks, and with investors. And if people want to follow along, we'll put a link to your site at the bottom of this interview so people can jump right over there and take a look. And looking forward to our next conversation.
Thank you, Shad. Thank you, Corey. I really appreciate you having me on. I really love the work you guys are doing, and it's an honor to be with you. Thank you.